Eric Mwathid, Mwathid.com for the weekend of January 23rd and 24th. Let's take a look at markets here and begin by taking a look at how world markets closed on Friday. We can see that Japan was the biggest mover, up about close to 6%. China was up, so was Hong Kong. Australia was also up. Pretty much, let's call it a nice session on Friday. European markets were also up on Friday, and a score about 2% would be a good average for most of the markets. Nice gain in Europe as of Friday's close. Take a look at the Americas and we see that day 2 did well. Brazil was up 1%. I think Argentina was up close to 6%, and the other markets, Canadian market was up 2.6. Looks good. US markets right now with about an hour and a half to close for Friday's session. We can see Dow up 1%, Nasdaq up 2%, S&P close to 2%, and we see that oil is up about 8%. Let's take a look at the charts. All right, let's be serious. Take a look at the Australian market here, which this chart does not reflect Friday's close. So it should be slightly higher. On the weekly chart for the Australian market, we see a theme that's going to be pretty much consistent across markets, which is a slight improvement on the weeklies and the dailies. So we made lower lows over the last couple of weeks, but we are looking at the RSI making an improvement. So the higher highs or higher lows on the RSI on the weekly, and also there's a line connecting recent RSI lows. So we can see here some sign of life, which is pretty much what the bulls want to see. Take a look at the daily. And the daily also has the same type of situation where we made lower lows between December lows and January lows. For now, we see an improvement. That's good positive divergence, could set up for a market that might recover to some extent. How much of a move, we don't know. And also we can see there's a line connecting RSI lows going back to August. Nice looking line. Multiple attempts to close below the blue line there that failed. So net we can see that on the dailies and on the weeklies right now, some markets are pointing for potential bounce. So that's the good side argument, the bullish argument. Now, of course, we have to mention the monthly chart. Even as of right now, we continue looking at monthly charts that are still bearish, moving to fresh monthly lows. RSI on the monthly, close to 3-year lows. That's a major risk as of right now. And the MACDs are also trading at 3-year lows. So the risk is that the markets are still looking like on the monthly, giving us the sell signal that has been the reason for the markets going down. So the monthlies have yet to show any stability. So the risk continues to be that markets could still be under some downside pressure. And I'll show you some charts that point to that type of resistance even after the last couple of days moving to the ups. Let's take a look at the Chinese market. We can see this here does not reflect Friday's move, which was a 1% move to the upside on Friday. But we can see as of right now, we are holding the lows of August. So those August lows continue to be holding, which is okay. In other words, the market is finding some stability around here. So that looks okay in my opinion. Also, if you take a look at what happened over the last week or so, we made a slight lower low on the daily chart with an improvement here on the daily RSI. In fact, let's take a look at a 6-month daily chart. And on 6-month daily chart, we can see slight lower low coming into Thursday and a slight improvement after Friday's bounce of this line. So there's a slight improvement there, albeit very slight short term, but we can see a reason for this market to have a chance of moving higher. So if we take a look at Japan's Friday move, we can see here it gained about 900 points to bring it all the way to about 17,000. So almost a 6% gain on Friday, which is not shown on this chart. But I think I'm not sure that that's good enough to take it out of trouble. My personal opinion is it still has to move above the break line. So there was a break line here. So either it has to clear this line, this declining line, and I think Friday's move might have brought it back to that blue line. So that's the first challenge there, short term. And also there's another line which was a recent break. So the RSI broke down here. and you can see that that is where it needs to be moving above. So I'm not sure it's gonna clear that. If it can't move above this line here, which was the break line coming into this year, then even after Friday's nice gain, it could still be in trouble. Let's take a look at the Indian market here, and we're looking at the Nifty, and go back to a couple of weekends ago. We had talked about the Nifty having to make fresh lows. Why? Because we had seen the 10-week moving average. So the 10-week moving average had already made a fresh 52-week low. And because the 10-week moving average was at fresh lows, our speculation was that the market would have to make the prices also go to fresh 52-week lows. So we got that this past week. Check. Now, like other markets, what we are seeing here, in my opinion, is a decline in weekly price action with a slight stabilizing of the weekly RSI. I think that's good enough to stem some of the recent slide in the market here based on this short-term positive divergence. And additionally, if you take a look at a 5-year weekly chart, you can see that even though we've been making lower lows over the last couple of weeks and months, if you take this 5-year weekly chart, let's get that out of the 5-year weekly, RSI seems to indicate that around here we should not be too surprised if this line holds, and this connects the RSI lows going back to 2011 and the recent lows of 15, and now it is trying its best to hold that line. If it can hold that blue line on a weekly time frame, then we can see that week to week there is a slight chance of a recovery after it confirms support. On the other hand, if we can't hold, then we break through that, then we should not be surprised to see prices decelerate even further. Also, there's another view on this 5-year weekly chart, which is a line right there. Destroyed. Line somewhere around there. And this line so happens to be at about 38.2, thereabouts, on this weekly chart. And ever since the market moved above this range in late 2011, early 2012, we've seen that the market's been bouncing on this green line for nice re-entry for swing trades. And here also, same type action. I'm talking about entry for swing trades. I've been coming at support line on this level here. So now if the market can generate enough energy to bounce back above the green line, then that might be good enough to stem the current slide. Otherwise, trading below the green line and also trading below this support line on a weekly, anything below those two lines, then we can see lower prices. If you take a look at the daily chart, just like other markets, lower prices over the last couple of weeks, and yet we see an improvement on this line here. And we can see over the last week we formed a nice double bottom on this line. So this blue line is giving bulls hope that the market could actually stabilize. So this is good support for now. Anything above that and the market might have a chance of slowly working its way higher. So that's good support for now, and one can use that if they really want to be aggressive and want to play any bounce in the market. Now let's go to the problem. Problem is the market is coming back to where it's been stalling. If you take the break line here on the RSI, and here I'm using RSI period of 26 on the hourly, right, hourly chart. And so we can see that the break point took place here. That was off the highs there at about 7,900. If we draw a line from here, we can see where it's been stalling. So let's do that. Just slightly above 50. You can see this has become a problem. Once we broke through here, the market went down. Also, once we moved above the red line, the market went up. And now we are coming back to test that red line. So let me just show it another way. Above the red line, the market did well and bounced. Once it moved back below the red line, it has been down since, and we are coming back as of Friday's trade to test that line. So the risk is there that after Friday's nice gain, we might have seen the market running out of energy, and maybe we begin the week with a little bit of a pull back because of that resistance. Otherwise, for the market to have another movement higher, just like it did here in late December, it needs to clear that red line. So since we haven't cleared the red line, one can assume that that is a reasonable resistance area. So let's take a look at the 30-minute chart just to see what's going on. On the 30-minute chart, again, we are looking at Nifty. And here we see a confirmation of what we are talking about. There was a break here, first week of January. That break brought the market off this level. And of course, we know we've been down since, right? And so we can draw a line from there that should give us a little bit of a framework of what we are dealing with in terms of potential future resistance levels. And there you have it. We've hit this line once before for the highs right there. And now we are coming back to test that red line. Anything confirming resistance would indicate the next swing trade is lower. If we back test the same red line and go backwards, you see that it coincides nicely with the previous break right there. And that break brought the market off even higher levels. So that line is legit. If we can't move above this line, then we pull back. Remember here, again, using RSI setting of 26. And of course, the analysis will not be complete if we don't take a look at the monthly charts. Monthly charts continue to be bearish, as we've been discussing the last couple of months. Monthly charts haven't changed. We are still down for the month, about 6% plus. We are seeing that the RSI is still trading at 3-year lows. That's a major sell signal for now. And we also see that the MACDs have been and continue to trade at fresh 3-year lows. So yes, day to day, week to week, the market is showing some signs of life, but we see that the MACD remains at 3-year lows, which is a very risky spot whenever you're trying to find a rebound. So the risk is still there that the market is broken in terms of the monthly charts, even though we've shown that the weekly and the daily could be showing life. Unfortunately, your hourly charts and the 30-minute charts are still coming back to show potential resistance, where they've been seeing some resistance over the last 2-3 weeks. If we take a look at the South African market by way of the Dow Jones South Africa Stock Index, we can see here slight lower low in price and a slight improvement this past week. So we see this pretty much in many markets across the globe, that there's some type of support that took place last week. We can also see the daily showing the same thing, lower lows, improving technicals. So for now, maybe the market wants to generate enough power to move higher. This is something somebody can use to at least use this as a line on the sand. Anything below this recent lows, and maybe this is breaking down, but for now it seems to be holding. So let's wait and see what happens. It's not the worst thing that could happen because of that improvement on the technicals. Let's see whether that's going to generate enough power. Now, my only take on this is, even though the market is trying to bounce, is if you take a look at the recent break. Now, this break took place at the beginning of 2016. So there's a line here that the market first and foremost needs to move above. If we can't move above that red line in the short term, after this week's trial to move higher, I think we still might have a market that is going to stall. So coming back to the stall point or the break point of 2016, if we can't move above that, even after Friday's move, I still lean towards a market that wants to go lower. Take a look at the London Financial Times or the FTSE. And here we are seeing the same type action, lower lows in price over the last couple of weeks and months, right? And yet we see a slight improvement this past week. That's good. In fact, you can see that this support line here, as the market was making fresh lows, has come at about 38.2 on the weekly RSI, which might suggest that there is a slight possibility, or let me not say slight, there is a possibility that the market could bounce from here. In other words, the support is genuine, and as you made lower lows, you saw this improvement. So we've seen this on many markets across the globe. If we take a look at the daily for the FTSE, we see the same type of action. There's two lines. Number one is just this simple line showing an improvement and a double bottom over the last 2-3 days on the RSI, and then Friday's nice move higher. So that's nice positive divergence. That's one line, and the other line is the line connecting RSI lows. If you draw it this way, it connects perfectly with the support from this week. So as long as this line is holding, we can assume that the market is going to stabilize at the very least. Now, just like we saw for the FTSE, problem is the hourly. Here we are seeing the hourly coming back. If you come and take a look at the break point in late December, or early December actually, early December, we broke through here and the market did pull back, as you can see, right? And so we can draw a line from here. And it so happens that this was also another break line. Same level became a break level here in late December before the plunge. And now we are coming back to test that line and we seem to be stalling. So short term, like other markets on the hourly, we see that markets look like they might start the fresh week with a pullback because of this resistance, unless the market can engineer some type of a bounce or energy good enough to take the market above the recent hourly resistance. But as of Friday's close, hourly charts are showing resistance, so we should expect a pullback after the last couple of days bounce. And of course, let's not forget that the monthly charts continue to remain broken. We haven't seen a positive monthly move, so the monthly charts are still broken. RSI is still trading at 3-year lows for now, and the MACDs are also at 3-year lows for now. So the risk continues on a month-to-month basis to be pointing to the downside. Take a look at the French CAC 40. So the French market also, same type analysis, lower lows in price. In fact, lower lows off December's lows, improving technicals. Short term, right? That's good. And also we can see that if you take the lows going back to August, draw a straight line connecting the lows of December, you form that nice support line. So as long as the market is holding above this line, we can say that there is some stability now that has been introduced in the market. Take a look at the German market, the DAX, and also same type analysis, lower prices, improving technicals, and also the line connecting recent RSI lows, just like the FTSE and the French market, all showing support. So short term, that's good. Also, we see that it's coming back to test this band of support. So let me draw a line there. So somewhere around here, you can see the lows of January 2015, lows of August, lows of September, and now the current lows. All of them seem to be finding stability around here. So you can see that the market had a nice reason to bounce after hitting that support level. So as long as the market is holding, coming back and testing this level and holding, for now we can assume that the market is changing its posture, albeit slightly, and as long as holding on the green band of support, it could bounce. Now the problem is if we eventually come back and test that and we fail, so if we come back eventually and fail to hold that, that would not be good. And also if we break through this support line. But for now, those two lines are holding, and so net, we can say at the very least, the market is stabilizing. Also, if we take a look at the weekly chart, we can see that there's chance here that this could also be an area where it could at least stop going down, because if you take the lows of 2011 and the lows of late last year, you can see that there's a line here on the weekly RSI, so 5 years weekly RSI, that seems to be holding. So that's something to watch. There's another view, which is the RSI support line over the last couple of years, going back to 2011. If you draw the line right there, you can see that it gives us nice lows here, nice lows there, here nice support, also here nice support there. All of these were good swing trades. Eventually we moved back above the green line there for an entry somewhere there. And again, this line so happens to be just about 38.2 or slightly below that. So if it can find support here on a week-to-week basis, so let's say if the week-to-week chart can bounce on this green line, there might be enough reason for this to bounce. Also, don't forget there's a line connecting the lows. So both of them did end up finding support here as of this past week. So week to week, this chart actually by itself looks okay. If we take a look at the Canadian market now, we can see nice gain for the week, about 2%. We can see also we did bounce off the 30.9 level So bounced above or the 30.9 level, which is good. And like the other markets, we also see an improvement here because we've made lower lows over the last couple of weeks. And while we're doing that, we see that there's a slight improvement on the weekly RSI. So that's good. Take a look at the daily for the Canadian market, and we can see today having a nice follow through after yesterday's move. And here we are having a 2-day move that looks good. Now the question is, what next? And I think there's a chance, in my opinion, we might have to test these lows. And I'll explain why in a second, because we spent some time here below 30.9, chances are we are going to have to test the lows, because that's just not how we make lows. Generally speaking, you can also see that as an example. We spent some time here below 30.9 while we were making these lows here, but we did come back and there was a test of those lows on a daily closing basis. So we came back and tested those. So I speculate, my thinking is that somewhere around here, it will not surprise me if we stall at current levels, because there's a line connecting the, if we draw a line like that, I think we're coming back to test this, and I'll show that on the weekly chart, on the hourly chart. So let's go to the hourly, and you can see that the hourly is testing this break. Coming into December, there was a break there. We can draw a line from there, and we can see that as of right now, this is where the test is taking place. And you might not see this, but this has been hit twice over the last day or so. And so that seems to be, as we come into the conclusion of this week with about 45 minutes to go, that the market might pull back off these levels. If we test the red line going backwards, we can see that there was uniform activity here and above the red line and back below it. So that was a trap there. And also there was resistance here, double top for the highs there. So if this is the case and the market continues holding below the red line, chances are the next swing trade, in my opinion, is for the market to pull back. And again, back to the monthly chart, and the biggest risk here continues to be bearish. We are moving below 3-year lows on the monthly RSI. So we already broke down in price. RSI already broke down. RSI continues holding below 30.9. As long as the RSI is below 30.9 on the monthly, this market continues to be under downside pressure. And we are looking at the MACDs trading at fresh 3-year lows, and they continue to be trading at fresh 3-year lows and also trading below zero on the MACD. So month to month, we haven't seen any improvement. Month to month, it still looks like the market could still be under some continued pressure. Take a look at the Brazilian market. And we can see here, still looks bearish in my opinion, month to month, just because we are still trading close to 3-year lows on the monthly RSI. We already broke down in price and we haven't seen any monthly gain. So the monthly charts haven't turned positive. So we haven't seen any improvement on the monthly chart, and the MACDs continue to be trading at fresh lows. So the problem here is that even with a day-to-day move, the risk continues to be to the downside because the monthly charts have not changed. Let's take a look at the S&P 500 with about 45 minutes to go before the close of Friday's session. Just want to end this here with a look at the 30-minute chart for the SPX. And just like we saw with the Nifty, coming back to test that level here. And it's weird how these markets all seem to mirror each other. Here we have a double top on the 30-minute chart for the SPX. So it would make sense that coming into the end of this Friday session and going into Monday, chances are, as long as the market is showing respect of this resistance line on the 30-minute chart, we should expect a pullback. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. ESC. Woo!